Hello, July. Nice to see you. Thanks.
Thanks. The light is a bit too harsh. Let me take off some of the lights.
Okay. Peter, can you hear me okay?
Very well, Alec.
Fantastic. You're nice and clear. Right. Okay. Thanks, gents. We're trying to get the news as it happens rather than waiting until 5:30. So that's kind of the reason. Thank you for coming through. I'm going to hit record, do a short little sting, and then into our conversation.
Okay.
Well, the listing today on the Johannesburg Stock Exchange of Thungela Resources was, well, predated by a little bit of controversy. Boatman Capital, a short seller, published a 39-page report on the website saying that Thungela Resources is worth zero. Quite a statement. And the chief executive of Thungela Resources, July Ndlovu, on a day that should have been one of celebration on the new listing. I see the share price has been under pressure this morning. July, are you able to give us some more clarity on the Boatman Capital allegations that to fix to rehabilitate your coal mines is actually going to cost more than the business is worth?
Alec, good afternoon. The starting point, I guess, is to say that the content of the Boatman research report is deeply flawed, very speculative, insofar as the central pillar of what they're saying is concerned, which is that we have not provided adequately for our rehabilitation in terms of NEMA. Firstly, they make this sound like this is a Tungela issue. This is an industry-wide issue in South Africa, and the NEMA regulations on which Boatman obviously are basing their conclusions remain a work in progress. It's common cause that
let's just go back, if we can. If we can, just to understand this better, when mines come to the end of their life, there is a legal requirement to rehabilitate those mines. Now, that used to previously be covered in the MPDRA, the old mining regulations. Now, there are new regulations coming in. You mentioned NEMA. You say that's a work in progress, meaning that they can still change a lot.
So these regulations, Alec, were promulgated probably 8 years ago. And the reason why they've been deferred every so often since then is because these are unworkable. They arbitrarily inflate what the provisions need to be. In fact, in some strange way, Boatman argue the case actually proves the industry position that in fact these regulations are unworkable, which is why they've actually continued to be deferred. But here's the point. The crux of the issue is that Boatman are saying we should have made provisions against draft regulations that are out for comment. That's not a requirement in terms of accounting standards. Our provisions were audited. They comply to IFRS. In fact, we have gone further than the minimum requirements of the law and provided 6.46 billion on our balance sheet, although the law only requires us to provide about 3.9. So we actually have taken a far more prudent approach, given what we think is sensible. To argue that we should provide against arbitrarily regulations that inflate the requirements, not because the real liability has changed, would sound quite difficult to contemplate, nor would it demonstrate that we are responsible as leadership.
I guess the issue which was then raised on Bloomberg and sent out worldwide was that the new rules were supposed to come into place this month on the 19th of June, but now they've been postponed until 2022, June 2022. So there is at least another year of discussion that's going around there. But if they were to be promulgated in their current form, then presumably Boatman is right in being skeptical about the rehabilitation costs or liability.
If they were to be promulgated in their current form, I think we as the mining industry would have recourse against what are purely arbitrarily regulations. In fact, the reason why the government has continued to agree with us as the mining industry and continue to seek a solution that is acceptable, that protects and grows the mining industry, is exactly that point. Personally, I don't see these regulations coming in the form that they are. In fact, I don't think anybody in the mining industry sees that either.
Peter Major is with us. He's with Mergence Capital. Peter, this is a big issue because the share price this morning is down about 10% on its first day of listing. We were expecting that there would be some selling from London, but given that it's now all over the wires around the world, that the company might be worth zero, or at least that's the allegation, that would surely have played on investors' thoughts.
Sure, Alec. It probably did play on their thoughts. I don't know enough about this hedge fund. I'm assuming it's not one of the Tesla hedge funds that said Tesla was going to zero, because I think most of those went extinct. But this isn't Tesla. This is a mining share, and these projected liabilities, these rehabilitation liabilities, they're continually being recalculated up and down. They're continually being negotiated between the DMR and the mining companies. And a lot of it has to do with the mine life. If your mine life is 20 years, 30 years, obviously you've got a lot longer time to amortize the cost of that. And we all know that if a mine is operating, it can handle those liabilities for a quarter of the cost than if that mine is closed and then they have to start doing the rehabilitation from scratch. So this government supposedly is very concerned about jobs and equally about the environment. And the best way to keep jobs is to assist the company to keep running as reasonably prudent as possible. So hey, they might be right. The liabilities might end up being double, but over what time period? And they might be wrong. The liabilities might be a lot less. And that's what creates a market. Huh? Some people think the gold price is going up, some think it's going down. What's the time difference? But we all know there's lots of hedge funds always writing reports on why some companies worth zero. And we'll only know in the future if this one was righter or wronger.
I suppose the issue here is that the life of mines in the portfolio is not 20 to 30 years, but as they say in the research report, Boatman Capital quotes 5 to 11 years. So if the new laws come in and they are as punitive as proposed at the moment, then you've got to write it off against your profits in a very short period.
Yeah, no, that's true. You know, we said this will be trading at a single-digit PE when it lists, and we said it's probably going to be under pressure for 2-3 months until it gets shareholders that really want to hold the shares.
July,
Alec, but also I need to provide clarity around the life of mines. And we've been at pains to explain that, you know, we've got the optionality to extend the life of our mines as and when we need to. It's not uncommon in coal mining that you would have an open pit that lasts 7 to 8 years. And if that's all you're measuring, then you would say, yeah, the mine has got a 7 to 8 year life. But actually, we've got more than adequate resources in the ground to extend the life of these mines if we need to.
The thing that would confuse many people is that Anglo American appears to have done a lot to make this company successful. Yet, if that report is accurate, they're selling shareholders and you, July, and you and your management team down the river. Because if you've been given a pup, as is suggested, then what are all these guarantees and support that Anglo American has been discussing?
I like you would have to think about a company of Anglo American stature and history and legacy doing the kind of things that are being described. That report is fatally flawed. If you actually go through the detail, even some of the most basic mistakes they make just makes that report to question. Let me give you a simple example. He says we have been way too optimistic on the price for this year. And he said we should have used 60. On the one hand, he doesn't actually recognize that we've got price protection if the price is below a certain level. On the other hand, I'd rather be wrong, and actually in this instance we'll be more conservative. Prices are way above 100 today. How can you then say his analysis is accurate? I think this report qualifies more as an opinion piece as opposed to an analyst report.
Just on getting back to NEMA and the new legislation as far as rehabilitation is concerned, what recourse do you have to Anglo American if the government is to play very hardball?
Look, it's not about if the government plays hardball. Peter is right. I mean, you first and foremost provide and concurrently rehabilitate on an ongoing basis. However, if at all it happened, and this is a nuclear option, this company were to fail, you know that in fact NEMA says the one who disturbed the ground would rehabilitate. But I don't see that eventuality, quite honestly. We have done what is responsible and prudent in the circumstances in terms of what we're required to do. We have actually looked at this in a fair amount of detail. Experts, independent experts, have looked at what we are saying. Yes, they've asked us to improve minor things here and there, but by and large, we were provided to be able to close our mines responsibly. And more importantly, we have said we are creating a green fund into which we're putting cash collateral to allow us to be able to discharge of our obligations at the end of the life of our mines. What more could anyone ask for?
But the question is, what recourse do you have to Anglo American or none?
No, you don't. You don't. You don't have. They've sold this business in its entirety.
So the
this
new
is a clean break from Anglo. We are now Tungela.
So the new shareholders, Peter Major, just from a thinking, if you're buying into Thungela Resources today, that's it. What Anglo has provided, that's to done. It's the new shareholders who are going to have to box with government, or the new company that's going to have to box with government on rehabilitation. On a global perspective, what we've heard now from the CEO, are these provisions in line with what you would expect in other coal-producing companies in the countries in the world?
Well, if we compare what Billiton, South 32, Sereti, what these companies have been negotiating back and forth, yeah, I think it's pretty in line, Alec.
So the new NEMA regulations that are being proposed are perhaps, as politicians often do, they shoot for a number and then eventually we come down to something that is more reasonable after negotiations.
Yeah, very much. And government is slowly realizing this immense power. They used to think that they just had to write a piece of legislation, any kind of legislation, whoever dreamt it up, they just had to write it, and the mining companies could click their fingers and follow it to the T, just how the people who wrote it up envisioned it. And usually they didn't envision all the consequences of it. But the last few years, government's realizing not only do they have to put a lot more thought and effort and quid pro quo writing these up, working with the parties that are supposed to implement it, but then they've got to stay with them, monitoring how does this work in reality, and how does it fit in with the employees, with the communities, with the infrastructure, because our government has not been thinking three-dimensional from the day this Minerals Act came out in 2004, but they are slowly getting there. And so this is definitely a work in progress. It's in everybody's interest that this mine runs for 30, 40 more years, and that it employs more people than today, not less. And that, yes, it mines very clean and efficiently, and that the power plants are able to burn this cleaner. So government has every reason to make sure these are prudent and they're acceptable locally and internationally, but that they're workable. They have to be workable regulations.
I think that to add, Peter and Alec, I mean, Peter is right. Not only does government have an obligation to do that, they have realized over the last 6 years that these regulations are not workable, which is why they've not been implemented.
Just to close off with, the share price started at 25 Rand a share, went up to 26, then came down quite sharply, about 10% off those levels. From your perspective, July, were you anticipating this kind of reaction from the investment community?
Look, we kind of expected modest volumes as investors feel their way. But secondly, we expect that over time, the share book is going to change from predominantly offshore to people in South Africa who actually understand our thermal coal story. So this volatility we kind of expected.
And Peter, from your side, is again getting back to the investment case, is it a stock to start buying now, or do you foresee further weakness before one should be accumulating?
Well, to buy today, it is so tough because you don't have a clue how many holders are weak holders. You don't have a clue what portfolios and funds want to put this in. Look, if the coal price was much lower today, I'd probably be picking some up. The coal price is pretty strong. It's following a very strong oil price. So you're paying for a share that's supposed to be reflecting a pretty strong oil price today. I would go in slow. If I held some, I wouldn't sell it, but I wouldn't start adding to the portfolio until I see, does it start trading in a tighter range? But yeah, the first day, only if you've done a lot of work on this and you say, boy, my 1 and 2 and 3 year IRR show this thing's given a 30-40% rate of return, I'm going to take it now. And if it goes lower, I'll just buy double. But
and more,
give it a few days, give it a week.
More specifically, would you then be ignoring what Boatman Capital put in its report about the company being worth zero?
No, if I'd sit with my research team and say, let's go through each of these points. Let's address these points and see how they compare to what we believe the industry regulation is, to see what we compare the overall environment's going to be. We've seen these with Capitec. We've seen it on the financial services side. And hey, there's nothing wrong with the report. We know who published it. We know what their objective is. It's out there in the daylight. We can all analyze it.
Thank you, gents. That was just exactly, and I know on a day like today, July, I really appreciate you sharing with us. Thanks a million. And good luck for the rest of the day. I hope it is a celebration tonight, now that you've got this off your chest.
Peter, you must go and buy today. Tungela will surprise you.
Wonderful. Thank you again. Okay.
Bye.